So welcome, everybody. Good afternoon, good morning, wherever you're calling in from. We appreciate you taking the time to join us today for this very important discussion that I know is top of mind for many of us, navigating a higher governance standard to address the growing ESG scrutiny, but most importantly, the need for third-party assurance on ESG disclosures to align with new requirements. My name is Susie Katus. I am SVP Market Leader at Datamaran, and I will be hosting today's conversation. And I am excited to be joined by friends and esteemed colleagues in this space who Datamaran and I personally have had the privilege of collaborating with over the many years in this space. A quick note for those of you who are not so familiar with Datamaran, we are a platform that companies depend on really to have a smarter approach to ESG, meaning a data-driven, tech-enabled way to really validate what their ESG priorities are and bring meaningful information to those governance discussions where they make key decisions on their ESG actions. Today, we're going to spend more time hearing from these thought leaders. So I'm happy to be joined by Amy Beers, who is the Senior Director of Assurance and Advisory Innovation at AICPA, the American Institute of Certified Public Accountants. Amy, I really appreciate on your LinkedIn title, you say that you are identifying techniques that improve the audit as well as assurance and advisory services on reporting that falls outside the traditional financial statement audit, including new technologies and sustainability services. So welcome. Appreciate you joining us today.
Thanks for having me.
And then we have on the other side of the ocean to us, Antonis Diolas, who is Head of Audit and Assurance at ACCA, Association of Certified Chartered Accountants. Antonis is also a technical advisor to the International Auditing and Assurance Standards Board, which is now, as I hope many of you know, developing the landmark global sustainability assurance standard, the ISSA 5000. And that's really more to look at trying to provide a standardized approach to assurance across all of these new disclosure requirements. Thank you for joining us, Antonis.
Thank you so much. Just a small clarification. I'm a former technical advisor, so the term ended in December 2023. So it's very, very short.
Just new former.
Yes.
Thank you for clarifying. And then when we look at the corporate perspective, right, obviously those who are really in the hot seat now, we're going to be hearing from Chris Librie, who is Senior Director of ESG at Applied Materials. And Chris, you've been deeply involved in all things ESG as well as assurance engagements for over 10 years now. So glad to have you with us.
It's great to be here, Susie. Thanks for inviting me.
And then going back to the other side of the ocean, we have Piera Ziedek, who is Team Lead Integrated Reporting and Sustainable Services at DWS. And she's executing on all things CSRD at the German asset management company. And you've also been involved in EFRAG oversight of ESRS developments. You were also a consultant at EY, so you bring a breadth of knowledge too.
Thank you, Susie, so much for your kind introduction. It's great to be with you guys.
Great. So before we get into the meat of the discussion, which will basically kind of give an update on where we stand when it comes to regulatory requirements and third-party assurance, we'll then hear from Chris and Piera on what they're doing to be prepared. We'll then hear from Amy and Antonis of what accountants and assurance bodies are doing to help meet those prepared deadlines. And then we'll go into more of an interactive Q&A. With that said, some housekeeping. We are recording this session and it will be shared. The recording will be shared with everyone who's joined us or registered. There's an ability to connect with my team if you have technical difficulties. So just use the chat function in the platform Zoom, but you can also email my colleagues at marketing@datamaran.com. And any questions that you might have throughout the discussion, I'll just be keeping an eye on those. Please use the Q&A functionality in Zoom. And we'll make sure that we capture those and do our best to respond to as many as we possibly can. So going into the meat of today's discussion, What we're seeing, obviously, is that there is just now a tsunami of new requirements that are hitting companies globally. And we see that there is a shift from voluntary to mandatory when it comes to how companies think about their ESG strategy, governance, and disclosures. These are some of the most notable developments at play. So more on the voluntary side, we have IFRS and ISSB. On the mandatory side, we are obviously all thinking about CSRD in the EU, but that has, a global ripple effect impacting lots of companies outside of the EU. There's also developments here in the United States that are taking precedence in California, the California Climate Disclosures Act that just came into play, the US SEC climate proposal, which is 2 months away for 2 years now to be introduced. But the latest is we should hear something in April of this year. These are the core developments. We're not going to spend too much time talking about those. We're going to talk about more the impact of those. And really, of course, we're talking about disclosures, metrics, targets. But one of the resounding things that we had talked about in our prep call here was ultimately this shift reflects a shift in how companies have to think strategically about their actions around ESG issues. So this is much less a compliance and disclosure exercise. This is a strategy and governance exercise. And the connecting thread here really is the basis of this foundational approach to thinking about how companies look at ESG. And that's starting with the materiality assessment to really know what issues are most important to their company, but then having a process in place to really govern and have oversight of those issues. Think about how to align those issues with their overall business objectives and strategy. Look at it from a risk management standpoint. And then the metrics and targets and disclosure piece is, of course, a core component of that, but it's just a component of that. So today's discussion is really going to keep coming back to this. How can we think about this from a strategy and governance standpoint beyond just a compliance or disclosure standpoint? Now, when it comes to disclosure and when it comes to compliance, a key component of that is third-party assurance. So working with independent verifiers who can help really just credibly say that the information disclosed in your reports is trustworthy, it is credible. This is a rough timeline of essentially the phased-in approach that we're seeing to assurance, where what you'll see here is a lot of the requirements are asking for different scopes of information, but ultimately they're all asking that companies start with a limited assurance engagement and then eventually move to reasonable assurance. Now, I know, Chris, you're going to talk a little bit more about that, so I'm not going to steal your thunder. But this is the general direction is more scrutiny, more process, more controls. So with that, a reminder, what's the end goal of these shifts? What's the end goal of our conversation is really to reinforce how this is about having a stronger governance process with repeatable processes and controls, and then third-party assurance being a way to really help enhance the trust and the confidence that you have in the information that you're sharing. Now, before we jump into the discussion, we'd love to hear from the audience. So we have 2 polls for you today. The first poll is, are you planning to have your ESG disclosures assured by a third party in 2024? The answers that you can respond to are yes, no, we're still deciding. So we'd love to just kind of get a lay of the land, see who we're talking with today and where you may be on your journey. And we'll give it a moment there. Okay. All right, I'm going to end that poll. It looks like we've gotten the majority of responses. So it's a pretty strong push towards yes. I got a chat from Bob Riley saying yes, but only in a limited way. I think most people are starting there too. Some are saying no, and some are still deciding. So hopefully today's conversation can help those who are still deciding and thinking through the benefits and what you might need to do to be prepared. So with that said, I'm going to move it over to Chris and Piera to hear about what you are doing at your companies to be prepared and make sure that you can really live up to, a good third-party assurance engagement. I'll stop sharing my screen so we can see you a bit better. So, Chris,
Yeah,
been doing this a long time.
I have.
We mentioned the idea of limited, reasonable. We know third-party assurance can really be seen as an intimidating process to go through. It's a costly process. What's the best way to get ready, and who really needs to be involved in that process from a corporate perspective?
Yeah. Well, again, thanks, Susie, for the opportunity to talk to this subject. So I lead ESG. ESG is still a part of my title, despite some of the backlash here in the US. At Applied Materials, I've been here since June of 2020. But before that, I've led ESG type roles at other companies, most notably HP. So it's been about a 15-year journey for me. I've implemented data assurance at HP as well as at Applied Materials, and so I have some experience, some scars from the experience as well, because it is a little bit painful the first time you do it. It's like building new muscle, but once it becomes muscle memory, once the governance is in place, the people are in place that can deliver assurance, and a trusted third party has been brought on board, the process tends to run a lot more smoothly in future years. And what I would say is, with repetition, as with anything you do at the gym, it gets easier, it gets better. And it brings tremendous benefits to the organization as well. So, what it's done is it's created that governance, that linkage between the teams who are responsible for this. And it's also upgraded our ability to report our numbers in a smooth and credible way. So it's worth the work. It would be the summary of what I have to say about that, not only internally, but also externally. So, you think about the reputation boost that assurance brings to your disclosures, and that's really important as well, especially as we start to report Scope 3 data, right? So those of us who are familiar with Scope 3 know that those numbers range by category in terms of their certainty, right? Many of them require estimates on top of estimates on top of estimates. And again, the assurance process improves that and also gives it enhanced credibility. So you asked who's involved. I mean, it's really quite a large group across the organization, whether it's facilities, or it's our R&D team. When you think about Scope 3, we're trying to estimate the impact of our products on our customers. By the way, I should have said, what is Applied Materials? We are a capital equipment manufacturer that makes the machines that make the semiconductors and displays in just about everything. So our tools have a pretty big impact down the road. In fact, 99% of our footprint is Scope 3. So all of that needs to be done in a credible way in order to not only be able to manage expectations internally, externally, but also to set targets and move toward a net zero future. So that's a very long-winded answer there, Susie, but it covers the gamut.
I think it sets us on a good starting point, right? Ultimately, this requires input from across the organization, and the investment is worth it. I guess, Piera, you are steeped in all things CSRD. Where would you say is the starting point to really get ready, and how are you doing that at DWS?
Maybe just to add a little bit background to the role I have, or the roles I had before. So I'm not as scarred as Chris yet. I've only been working in sustainability for 12 years. One way or the other, always a little bit involved with assurance. As you mentioned, Susie, in your kind introduction, I was also on the Big Four side, and also looking at sustainability reports of clients back then. So I guess this year I will be as scarred as Chris, having to handle CSRD. At least this is what I expect. But what I always found very interesting, and this is also true here, where I currently work in this role as a preparer in the finance organization, and what I've seen back then at EY at the clients is, to be fair, the colleagues that have already done this, all of this assurance, all of this data management, they are already probably in most organizations, and this is the trusted finance colleagues, they've been handling reporting for 40 years. And to be fair, probably they had a little bit more time to prepare, but this makes them excellent colleagues to learn and hang out with, even if you don't work in the finance division, and kind of understand how they approach the assurance, how they approach the governance. And this is probably also, again, an advantage on DWS side, since I was already hired in the finance function 4 years ago. We immediately moved to a combined report in 2020 and integrated it in 2021. So we currently don't have the challenge to bring the sustainability statements in the summarized management report because they're already in there. But this is kind of, I guess, like the starting point. If you don't work in a finance function, if you don't have an integrated or combined report yet, under the CSRD and a lot of other disclosures are recommending that TCFD and as such ISSB, DAS2, that the sustainability information, climate related information should be in the mainstream filings. Usually that is the annual report. Reach out to these colleagues that have been taking care of for IFRS reporting, US GAAP, whichever national GAAP you have to report to, and try to understand how they build up this governance and how they've been engaging with their statutory auditor, and then take it from there. And learn also from the mistakes they made, especially when it comes to data collection. Under the CSRD, the increase of the quantitative indicators that we will have to report is so much higher that there will be no way around in getting some kind of automatization going in order to pass a limited assurance and potentially later a reasonable assurance.
Yeah, that's a great point, right? It's about elevating the rigor around the process to get to this information, but also just ensuring that the quality of information is accurate. So, we've talked about double materiality as being a key component of being able to connect those different disciplines that you were speaking to, Chris, that you were speaking to, Piera. So could you talk us through why that's such an important part of the assurance journey?
Yeah, I mean, double materiality is central to CSRD. And, when you put up that list of potential regulations and disclosures earlier, Susie, CSRD looms as the most important, for the reasons Piera just touched on. There's 12 ESRS, there's over 1,000 potential data points that need to be disclosed. It's just a really comprehensive piece of legislation. So it all starts with double materiality, understanding what's in scope, what's out of scope, which of the 12 applied to us. By the way, we're a US-based company, but extraterritoriality means that applied materials will be in scope for fiscal 25. So, what's in scope, what's out of scope, and then which of those 1,000+ disclosures really are going to be needed. And then, totally agree with Piera that, then that starts to set the whole tone of the assurance process. And I have to say, personally, I'm totally scared out of my wits about reasonable assurance, especially if we're thinking about anything much more complicated than scopes 1 and 2. But But in any event, that's where things are going. And so, and I think this idea of integrated reporting, as Piera says, also brings into scope our financial colleagues, right? So, so whereas, ESG and sustainability has kind of tended to exist in its own quarter of the organization in terms of reporting anyway, now we have, the linkage with finance and legal teams. So I think that even expands upon, your first question, who's involved?
I'm scared too, Chris, and maybe I would add one more person to the teams that you just mentioned, which is a big advantage. Also, again, sounding like a broken record, in the finance world, they do have the CFO involved. That means you do have an expo member that sets the tone for the financial world. And now, especially on the CSRD, you have the non-financial sustainability information going into your financial report. You ultimately have to involve this very important board member. And this just gives the whole governance procedures much higher visibility. And this is what I still believe in a lot of organizations, that this push of regulation needs, because everybody hears about it, but they can't really capture what does this mean? What does that mean for myself? How will I get involved in a potential CSRD report, ISSB report, and so forth? And this is where I guess also there's a little bit the difference with regards to financial reporting. Usually financial reporting, you do have 1-2 other teams involved in the financial reports, but it's very finance driven. Depending on your business model, you have the whole organization involved in producing these disclosures. So that means you have to raise this awareness across the whole organization, because eventually you have to go to a team that has never heard of sustainability disclosure, has never heard around CSRD. And then it's great if you have like an executive board member or any kind of person in a similar senior management position to back you up and say, listen, guys, this is really important. We need to do this.
Yeah. Yeah, and there was a question that popped up, excuse me, which relates to this, and I'm going to sort of couch it in a bigger question or comment around the role of internal audit, and tying back to why you have to start with a materiality assessment. I think from an audit standpoint too, this is really important, because a lot of companies are being misinformed, starting with a gap analysis across the 1,100 plus data points of ESRS, the standards under CSRD. But ultimately, you only need to report out on those that you determine material. So the starting point needs to be materiality, and that's also where internal audit needs to get involved right away, right, in that process from the onset. To make sure that, you're also avoiding over disclosure and all the burden and costs and risks that can be tied to that too. So, I would love to hear from Amy and Antonis as well, but as we end there, Piera, you had mentioned something about automating, automating processes. And so from that standpoint, what role is technology playing within DWS and applied materials to help you get to a point where you feel like you can start to have a repeatable process where there are lots of controls?
Well, Susie, you speak for Datamaran probably better than I do, but technology such as Datamaran, with these increasing disclosure requirements, I don't think it will work without it. Also, again, the financial world doesn't work without SAP, Oracle, or any other software solution. There is only a limited amount of ESG professionals or sustainability professionally on the market that you can hire. So that ultimately means I have to look into AI, I have to look into technology. And you mentioned the double materiality aspect. How can I, as a person, find out what is material, not only from financial materiality, but also from an impact materiality, I would have to read a lot of studies, a lot of reports. I would have to assess them, and I would have to come with a methodology that then either internal audit, also my external auditor will look at and say, Piera, this is interesting. How did you come up with this? This is rather subjective. Why did you take these peers? Why did you not consider these peers? And I would have to say, well, I can, in 1 month, probably not read 100 peer reports. But this is where, for example, technology like Datamaran comes in. You guys can read 100 peer reports for me with your AI and show me exactly what are the material topics that matter to my peers. And then I can say, how does that relate to my business model? Is this aligned? Is there other parameters that I have to bring in? And again, I can read regulation, but there's only a certain amount of regulation that the team and I can read. So at one point, it just goes down to capacity restraints, but also like the power is normally in the numbers. So the more data I can use, the less likely an internal auditor and external auditor will tell me, well, this is not really representable. You need to have a higher population in order to find out what is material. And again, the AI can skim through all of this regulation, can skim through the news, the peers, and so forth. And then I can still add a methodology that reflects my own internal priorities. I can still put in my own methodology around the thresholds that I set, similar to the financial world where I do have financial thresholds in order to determine what is material for a company. So this is, I think, like the best of both worlds. You have the technology, you use it to the advantage where it saves you a lot of time, but you still can design it in a way where it does make sense for you as a company.
Yeah,
Yeah.
to your point.
Just a brief reinforcement there of Piera's comments,
Please.
Susie. We're using Datamaran right now to determine which of the ESRS apply to us. And then we are working with a third party, one of the big 4 accounting firms, to do the gap analysis and ultimately hone in on, as you said, which of the 1,100 or so disclosures are going to be relevant to applied materials. So that's basically the process we have planned for this year. Where the gaps are, we're going to go out and then connect with the folks responsible for those data. They may be some of the same folks we already work with internally, but that's okay. And that's kind of this process we're going through in fiscal 24, so that we can be ready to collect those data and assure them in fiscal 25.
Yeah, absolutely. So key things there is obviously upskilling, right? Things are moving really fast, so we need to upskill in the most efficient and effective way possible. But also, how can we unlock and empower that human strategy and creative thinking that is so valuable and necessary to move us along and really focus on the end goal, which is, again, not reporting for reporting's sake or compliance and checkbox. It's really to make progress on these important issues. And there, there's also the question of how are accountants and assurance providers getting ready? Amy and Antonis, I know you're playing a massive role in research, thought leadership, education. Datamaran and ACCA have an exciting announcement that's going to be coming up in a few weeks that relates to all of this. But for now, I would love to get the perspective from the standard setters in the accounting profession. What are the types of questions that companies can really start to expect from auditors when it comes to their disclosure process, their governance process, as we've been talking about with Chris and Piera?
So I'll start there. If you think about assurance, it's going to be an evolution, it's going to be a journey. And so where we are today, where, assurance is not required as of yet, it will depend on, what you're looking at, what you're looking to get assured. So again, eventually under CSRD, I think the entire report is going to be subject to assurance, but in some other jurisdictions, there may only be a portion, of that data that is going to be assured. So what is the scope of the engagement? And so that will be probably the first question that auditors will have of what is the actual subject matter of the engagement. And then depending on, again, the jurisdiction and where you're located and what you're required to report, what standards are you reporting under? And those standards then become the criteria for that engagement. So those are going to be the first two areas that auditors will focus on. Now, of course, it's going to be very important for companies to have an audit trail and to have, so those auditors will need access to all that supporting documentation. And so companies will need to also set up accounting policy manuals similar to how they prepare for their financial statement audit. They'll need to document their process and document all their methodologies. And this is really going to be a change for many organizations as we move from ESG reporting and sustainability reporting, which has been largely on a voluntary basis or potentially for a marketing basis, moving to a more rigorous environment where this information is being used by investors to make investor decisions and regulatory reporting. There needs to be a rigor for these processes, and companies can leverage and should be leveraging their finance departments. Piera has been talking about that. They have these processes in place today for the internal controls over financial reporting and very rigorous processes that have been documented and are evaluated for their effectiveness of these controls. Those types of controls can be leveraged in this space. Some of the same systems that companies are using to collect data for their financial reporting might have some of that data for their non-financial reporting. And so, this might be incremental rather than a complete new activity for many companies.
And hopefully that gives some sense of relief to those in the hot seat who are preparing, right? Everyone's sort of learning as doing. But we were talking earlier, Antonis, about the development of ISSA 5000 and trying to create a global standard. So why is this important? And what can we expect from the assurance standard space moving forward?
Yeah, thank you, Susie, and thank you for the conversation so far. I've noted a couple of points that I wanted to touch. I'll come to ISSA 5000 in a second. I just wanted to re-emphasize what Amy mentioned. It really depends on the framework that companies will be reporting on. So, and what disclosures will be there. That probably is a starting point if they complied with the reporting framework. So questions will flow from there. I think Chris talked about Scope 3, for example. Those type of questions around completeness will be focused from an auditing perspective. Then when you talk about your materiality, do you have a documented process of how did you derive to that? There will be a lot of questions around decisions, and methodologies that were used to get to that. And I also wanted to touch on Piera's point around using technology. Technology is really key. I'm pretty sure that most companies will be doing that. That of course does come with risks. Obviously, it's important to have the right parameters in order to make sure that you derive to the data that are accurate to rely on. Otherwise, that will not be helpful. And that is a challenge that audit firms will need to deal with as they deal with this space. So moving to ISSA 5000, ISSA 5000, which is the newly developed standard by the IAASB. And by the way, just for everyone's understanding, this standard now was at the ED stage, and its consultation ended at the 1st of December last year in 2023. So the IAASB is currently going through the responses from the various stakeholders that responded to this consultation. So what these standards try to do is set a global baseline for sustainability assurance. And if I may, I will share a few insights of the standard itself, because I think it will be of interest. So the standard is framework neutral. So irrespective of what the reporting framework that the company decides to undertake or is required to undertake, depending on the jurisdiction, they can still, this standard can be used. So whether that is ESRS's or the ISSB standards, for example. It is also profession agnostic. So that means the standard is developed to be used by non-accountants, non-auditors as well. However, there are two fundamental premises on that they also comply with the ethical the IESPA framework or equivalent framework on ethics, or a framework that is at least as demanding. This is the phrase that's been used in the standard, and as well as they will need to comply with quality management standards like the ISQM1, or a standard is at least as demanding. And this does make sense if you think about this, because you have to be in a position to rely on an assurance report that came out from someone that is not being regulated as the accountants are. So, and obviously they will need to be regulated as well. So obviously having those premises is vital to get that. There are a number of points around the standard. The standard provides more specificity in comparison to the extant ISA 3000, a standard that was being used until now for this type of assurance engagements. So the standard tries to give more insights towards the effort and the difference between limited and reasonable assurance. And I should have mentioned that is suitable for both limited and reasonable assurance. It also provides more insights in terms of the materiality from a context of an assurance engagement, because in this context, the assurance providers obviously will need to deal with quantitative and qualitative disclosures. And the suitability of reporting criteria, it does also allow entity reporting criteria, which could complement the framework, which is another area that is being covered in the standard. It is quite important to note that it builds a lot on ISA 3000, because that standard, at least at this stage, was still perceived as a good standard. So a lot of its concepts came in 5000. And also it builds on 3410, which looks at the greenhouse gas statements, a more specified standard, as well as it builds on some of the provisions that come from the ISAs, the auditing standards. So I'll stop there. I know this is a lot to digest, but it's a very detailed standards. And I would say that the IAASB has developed a lot of material for those that are interested to know more. You can find that on its website, and there's a lot of useful material there, and as well as FAQs, etc.
Thank you, Antonis. And we got some questions around the name, and we'll follow up with everyone and share relevant resources. But there was a question here, that I think it's quite important because I'm sure everyone's dealing with this. Is it preferable to retain gaps in data rather than resorting to estimates and averages in the calculations when you actually go out to disclose? So I guess the question really is, should the emphasis be on data quality or transparency around process? It's a pretty loaded question. So I'm not sure who feels compelled to respond to that one.
I can try. I guess already under the GHG protocol, like 10 years ago, you had guidance how to use estimations if you don't have real data. And if you think that you have enough assumptions, and that also goes a little bit back into the background that the team and I were responsible for the TCFD report, for the corporate scenario analysis or portfolio scenario analysis, depending on your business model, you need assumptions. Like your whole scenario analysis is based on assumptions. So as long as you can arguably say why you used a certain proxy, a certain estimation, potentially the estimation is like not 100% estimation, but you kind of have like 60% of the data and then 40% is an estimation, and you explain why you have to use the estimation and how you used it, I guess it's fine to use the estimation because that, again, it means you show that you are trying, which is also when looking at the CSRD, it provides guidance on estimations. In CDP, for example, I guess they were more on the side of being transparent about things, and you get points even for being transparent. But after all, if you use estimation, that means you're thinking about the topic, coming back to your point in the beginning, Susie, around a governance and the underlying strategy, what we're trying to achieve. It means the company is looking at it and trying to figure out a way to produce a disclosure in order to likely track and steer it, rather than saying, we didn't invest the time to find out if we can actually report on it. And I guess if you find out that you can't report on it, that don't report it, or like the quality of the estimate is so poor, then naturally you would explain it. But I guess this is like a politician's answer. It depends.
Well, I think, you made a good point. The recent the developments, the mandatory requirements are all coming from voluntary developments that have existed prior, right?
Exactly.
So this isn't new per se.
Right.
There is, you can refer back. And Chris, it sounds like you want to say something, and Amy, we'd love to hear your perspective too on this.
I would just add a couple of things. I mean, I think estimations, it depends, right? I mean, I think if your estimates, as Piera said, are grounded in, solid assumptions, and they align with protocols like the greenhouse gas protocol, then they're fine. I think the key thing is they need to be consistent. And I think it's a great benefit to companies to disclose what their assumptions are. So one of the things we did when I was at HP was we created an accounting manual when we first did our scope 3 for the initial time. And we said, what were our assumptions? And we put that out there in the public space so people could assess them, poke holes in them, comment on them, and maybe even improve them, right? So so that I think is also key, is transparency about what your assumptions are.
And the process, right, by which you got to the assumptions.
Correct. Because as I said before, scope 3 is estimates on top of estimates on top of estimates. We know where we sell our products, but we don't have perfect data on how they're used. So obviously there has to be a certain level of estimation.
Yeah.
Right.
And
And
Amy,
in the assurance process, auditors are not going to be opining on the outcomes of these estimates or these assumptions. They're actually going to be looking at the process, right? To make sure that it's reasonable, to make sure that the data that is being used to make these estimates and assumptions is coming from a reliable source and is accurate.
Yeah, I would re-emphasize on that as well, Amy. And also, I think Piera touched it a little bit earlier. It really is important to involve your auditors at an early stage, or to have someone that has that experience at an early stage to go along with you in this journey. So for example, Piera did have some experience in the past. Even that is in financial audits, in addition to this space. That can go a long way when they prepare for their assurance. And to Amy's point, the important bit is to have it documented in your processes, so that someone independent, as the auditor will be able to follow and reach to that conclusion that the preparer did, depending on that requirement. So that's my take on that.
And Antonis, that relates actually to a question that we've gotten. So how will auditors evaluate the soundness of thresholds on materiality assessments, since CSRD is not prescriptive really about this? Do you have some thoughts on that?
I really want to know this too. No pressure, Antonis.
I don't have a direct answer on that specifically, but what I would say, I think I've touched it earlier on, is to be, if the auditor can follow the process that the preparer followed, and the assumptions used, and they're reasonable, then they can conclude on the materiality process. So if there are decision points, should be documented. If there are, as you said, depending on the area, by the way, if it's materiality, obviously it has to be an understanding that it's a strategic exercise, by the way. It's not just a simple exercise. It's a lot of involvement to get to that. And a lot of the data and the disclosures are flowing from that exercise. So it's quite important. I know it's not specific answer, but that is the approach that will be taken from auditors in case of that. I don't know if Amy wants to add something on that.
No, I think that I agree with you. And it's going to be judgment. There's going to be a lot of judgment in this space.
Yeah, and what we've seen just with the companies that we've worked with on this process, we've also worked with their auditors. I mean, we partner with a lot of the big four firms like Deloitte, like EY. Really, as long as you have that audit trail, right, to be able to say, here are here's the scope of information that we use to determine it. Here's the methodology. It's consistent, it's repeatable. And I think that repeatability point is really important too, because something that seems to be missed when it comes to CSRD compliance is you do have to report changes year over year, right? So in essence, you have to refresh your double materiality analysis year over year. So you want to make sure that, one, you're not overcomplicating the process from the start, because that will just make a lot more work, but that it is repeatable and consistent, and there is data to back that up. So with that in mind, I mean, we've been talking about the process. How does that tie back to governance, right? What are the types of questions that auditors are going to ask around the governance structure and process?
They're going to have to understand the entire process. And that's going to be as part of the standards, as part of understanding the company, and part of understanding, going through a risk assessment. They will need to have that full understanding, do these walkthroughs similar to how they conduct any other type of assurance engagements. Those requirements are in the standards. And I do want to just take a step back, because Antonis talked about ISSA 5000, and that is an international standard. But here in the US, we operate under, US CPAs operate under a little bit of different standards. Today, all US CPAs who perform these engagements on ESG information or sustainability information or any information outside of the financial statement audit do so under the AICPA attestation standards. Those standards are converged with ISAE 3000 today. And the AICPA does have a strategic objective to converge with those standards of the International Audit and Assurance Standards Board. And so the AICPA is looking at ISSA 5000. We have issued a comment letter to the IAASB, but we are analyzing the requirements in ISSA 5000. And some of those requirements, a lot of those requirements are not sustainability specific. They could apply to all different types of attestation engagements. And so we are considering adding those requirements to our baseline attestation standards for those that we believe are, should be appropriate for the US market. And so we're looking at both those requirements that are more broad as well as specific to sustainability. And the AICPA Auditing Standards Board intends to issue an exposure draft later this year on updating both the baseline attestation standards and potentially a new section of the attestation standards specifically for sustainability that will be used by US CPAs on engagements in the United States.
Important clarification, but also shows how there is push towards harmonization on that side, as we're seeing with the reporting standards, generally speaking. And actually would love to just kind of pulse check. I know there's been a lot of engagement on Q&A. There's some questions we'll still get to, but would love to do one more poll to ask the audience, now that we've gotten pretty deep in the conversation, what do you see as the most urgent area to tackle in preparation for third-party assurance? And so you'll see those responses pop up. So one is data availability and quality. The other is the materiality assessment. The other is governance process. And then perhaps there are other things that are top of mind. And I'm sure that these all have equal weighting, but would love to just hear from you what's really pressing. Give it some time there. Okay, it looks like we've gotten a majority responding, and I'll end the poll now. Oops, pardon me. So we've got, okay, looks like data availability and quality is the most urgent area to tackle for a lot of people listening in, but materiality assessment is there, governance process. I have to look at the chat to see if anything else came up. There, pardon me as I toggle between all the different windows. Okay, and actually someone brought up a good point. Isn't data availability directly linked to the materiality assessment? I think that the distinction there really, just to clarify for everyone, is obviously you can do the materiality assessment to determine what's important, but then being able to provide the metrics and targets that are required from a disclosure standpoint, that depends on a whole lot of different factors, depending on where that data needs to come from. Chris, to your point, you're a very scope 3 heavy company, so you depend on a lot of key partners to get that information. Okay, so we're getting towards the end here. I'm just going to take a look and see some other questions here. Okay, so there is a question. There are two questions that are sort of related to each other. So one question is, how can you find third-party certified professionals who can help you with this process? And also, when it comes to at the EU levels, how many countries will allow independent assurance providers, not auditors, to do the external assurance on their sustainability report? So I guess, Piera or Chris, how are you finding the right partners for you on this journey? And
well, there's always the obvious suspects, which are the big four.
Mm-hmm.
So most companies, big companies like ours, obviously we have an audit partner, And there's some discussion about whether your audit partner can also do your ESG disclosures currently. So many companies also have a strategic partner that they work with, of those big four. So that's one option. It tends to be a more expensive option, to be honest, but it's also, you get the greatest service and the greatest, connectivity. There are many other, I think, more cost-effective solutions with non-accounting firms that do sustainability assurance. Many of them are recommended already by CDP. So that's one place to start, is to look on CDP for their short list of recommended partners. And I mean, I'm not going to list them, but there's, again, a number of obvious candidates.
Yeah, and I think ACCA, AICPA, you could support in providing, I'm sure, a list of resources there that we can share with everybody after the fact.
Maybe just to add to Chris' point, is especially probably for those companies that are in scope of CSRD and will have to bring the sustainability statement in the annual report, financial report. My experience, whatever the statutory assurance company for the financial report is, since you have to bring it in this report anyways, it's just easier if it's the same assurance provider, given that naturally there is an overlap, and it can get a little bit tricky if that were two assurance providers for the same report. So that is what I would generally recommend. Again, something like a broken record, have a look in the financial disclosures, see who's the statutory auditor there, and try to aim for the same one, I guess. And
oh, sorry. I was just going to add that we've done a lot of research in this area about who is actually providing assurance. We've partnered with the International Federation of Accountants. We issue a research report on an annual basis called the State of Play in Sustainability Reporting and Assurance. And we've taken a look at the largest companies around the world, what they're reporting, what type of assurance they're getting, and who is providing that assurance, and under what standards they're providing it. And predominantly what we've seen is many companies are using, if they are getting assurance, they are using their statutory auditor for that assurance. But when they're not, and they're using other types of assurance providers, the standards that those other assurance providers are using are not necessarily the standards, ISAE 3000 or the International Assurance Standards Board standards. And if we look at the direction, and I don't know what will be required in terms of assurance and what standards will be required. I know in the US, if a CPA is providing that assurance, they need to use the AICPA attestation standards. Outside of the US, I don't know what Europe, the standards for assurance will be required, but presumably, if we're moving towards the IAASB's standards, there is, a question because many of those, the ISSA 5000 is based off of the existing ISAE 3000 and the audit standards, the ISAs. Will some of these other providers be able to perform the assurance using those standards? So it's something to think about.
Yeah, Amy, we're getting questions if we can have a copy of that. So I think the audience is keen, and, I'm conscious that we're at the top of the hour. So it sounds like Amy and Antonis, you're also dedicating a lot of time to upskill your members to meet these current and future demands, which is great because that's such an important part of the process. So any final notes, Chris, Piera, Antonis, Amy, before we officially wrap up the call? There are some questions we didn't get to, but we'll do our best to answer those via email.
I just wanted to say, we've talked a lot about measurement, assurance, obviously materiality. ESG and sustainability is all about transparency and performance. And the reason why these numbers matter is because we need to track them over time, and we need to make improvement, right? We're running out of time. So, this is all a very important foundational discussion, but the real reason for doing this is to make environmental progress.
And wider societal progress too, right?
Mhm.
We need to have better information to make better decisions
Exactly.
so we can accelerate and focus, right?
Right.
You can't do it all. So companies
Yep.
need to know where they can best prioritize and move the needle. And I think that is a very brilliant moment to end on. Thank you so much. I think we could have gone for another hour on this discussion. So perhaps we'll do a follow-up
Easily.
at the end of this year and see where we've come to from there. Thank you to everyone for your active participation. Appreciate all the questions. We'll send the recording and all of those materials that we had mentioned.
Thank you very
Thank you.
much.
Thank you all. Bye-bye.
Yeah.